What's going on with ESG, environmental, social, and governance? ESG is all about upholding or improving a company's capacity to produce value over the long term. So, ESG is about companies offering good risk adjusted returns by generating value for all stakeholders, be it employees, shareholders, customers, and the community. There would be both traditional financial indicators like earnings and cash flow, and also non financial components like human capital, social capital, and governance. It's said that ESG investments can make a difference without compromising performance, with higher potential returns, boost shareholder value, and the ability to outperform competitors. But is there a terrain marked by performance shifts, skepticism towards greenwashing, and a sense of pragmatism that may contrast the ideals of ESG? It seems like performance has shaped ESG attitudes. In 2021, it was said that nearly 67% of investors claimed to consider ESG factors when making investment decisions. Has this declined? According to the Association of Investment Companies, in 2022, the percentage was said to have dropped to 60%, and in 2023, it is said to be about 53%. When ESG investments are reaping substantial profits, embracing ESG may be an easy choice. But when these investments underperform, there's something to question. The studies on this seem to vary. According to Equity Quotient, those companies that proactively embrace stakeholder diversity and ESG principles tend to be more successful. There may be higher stock price impact, revenue, increase in EBITDA, and stronger retention. On the other hand, according to Morningstar, funds with the highest sustainability ratings received more investment than the funds with the lowest rating. But none of those funds outperformed the ones with the lowest ratings in terms of performance. The Investment Association is a trade body representing investment managers and such firms in the UK. There's a responsible investments category where people put their money into companies and projects that are considered socially and environmentally responsible. It was said that in August 2023, close to $545 million had been taken out of these responsible investments. So maybe the allure of ESG isn't immune to the laws of financial gravity. When returns are inconsistent, it may be that commitment falters. And the energy sector may present a complex ESG puzzle. It may be that ensuring energy security for a country is considered good governance and a social necessity. Does this mean a reliance on fossil fuels when it comes to achieving this goal? And if so, does this complicate the ESG narrative? Mining is deemed to be harmful for the environment, but can extracting raw materials like copper, cobalt, lithium, and nickel to establish a low carbon future complicate the ESG equation? Because these raw materials are said to be used to make electric cars and renewable energy technology. According to the International Energy Agency, the total global nickel population yearly is about 2.8 million tons. It's estimated that by 2040, the EV and battery storage sector would require about 3.3 million tons. So, will the mining industry lead to a cleaner future? There's nothing wrong with wanting to do good and augmenting relationships with suppliers, customers, employees, and one's community. How can the ESG puzzle be solved? Because what's considered good and bad?